wouldn't be touching like resupply or like Falcon Stable, for example, just because like resupply is fundamentally like it's a smart Ponzi. Retail can't necessarily tell it's a Ponzi by looking at it, but it's a Ponzi. Yeah.
Probably one of the top users of all the perp dexes right now that have ongoing points programs.
Look at every single like ohm fork there is, and then pretty much like try to find or go activist investor route to create value to some extent around some of these things, and basically try to like buy undervalued assets.
Regardless your size, if you have small size, you're getting hit by gas fees. If you have large size, you're getting hit by slippage. So much is lost through all of these like entry costs and exit costs, then swap fees, slippage fees.
That's like all purely organic. Like we've spent $0 on marketing, $0 on any like KOLs or anything like that. Basically, the biggest goal is to try to let the product speak for itself and build out like basically like the best yields at one. I joined pretty much like after the bull market. Basically, I found a TikTok video about Wonderland time, and this was pretty much like after shit was already starting to go down.
Good morning or good evening in my case from Germany, and welcome back to the Odyssey podcast. Today we are joined by 0x Law, who is running Stream Finance. How are you doing, mate?
I'm pretty good. Yeah, thank you for having me on. It's a pleasure meeting you, man.
So you have quite an interesting story and background in DeFi. Let's just start by telling a little bit about yourself, how you got into the space, how you ran it up, and how the idea of Stream emerged.
Yeah, of course. So I actually started off in DeFi around 3 to 4 years ago, probably closer to 4 now. Basically started off with around $5,000, and I initially actually found a DeFi through a very old. I joined pretty much like after the bull market around that cycle had already happened, and at this point stuff was already like pretty hard on the decline. But basically, I found a TikTok video about Wonderland time. And this was pretty much like after shit was already starting to go downhill. But basically, I joined the Discord to make fun of some of the people for actually like buying into a blatant Ponzi scheme. And then I looked at it and I was like, wait a second, like the treasury value seems like pretty disconnected from the actual like market price of this thing. So then it got me looking, and basically I started looking at a lot of these other, specifically like ohm forks, whose treasury values were basically like heavily disconnected from what they were trading at, basically. So what I would do is I would basically like go like and look at every single like ohm fork there is, and then pretty much like try to find or go activist investor route to create value to some extent around some of these things, and basically try to like buy undervalued assets to some extent there. Then from there, I discovered like farming and stuff like that, which I thought was basically like the best concept of crypto as a whole, because like effectively like you can hold bonds for like 4 or 5%, sure. But the thing is, you can maintain full liquidity while generating like very outsized yields on US dollars relative to like TradFi returns, which I thought that was like the most interesting part of DeFi as a whole, personally. So basically started doing that when I wasn't in any like directional positions on a lot of like in general, just trying to buy like undervalued like DeFi assets. And yeah, I mean, that's pretty much what got me started. So started off with 5,000 from that. Basically, I don't come from like a crazy background or anything like that. I did go to college when I was like 15, got out when I was like 17, but didn't actually end up going to a four-year university or anything. Basically, that 5,000, I got that from doing phone repair pretty much. And basically, I went full-time as a trader since I had a 30K portfolio. Mind you, I was paying rent since the day I turned 17. So yeah, it'd probably be a lot more if I didn't have to worry about like monthly expenses and like living off of it, like my 30.
That's what a cool story, man. How did you trade it up? I mean, 5K, especially in the Western world, is not a lot. You can sustain yourself maybe 2 months, 3 months if you're really frugal, maybe 4 months if you're living somewhere in the countryside where rent is close to zero. How did you trade it up, especially during the depths of the bear market in 22 and 23?
Yeah, I mean, definitely. So, I mean, probably one of the biggest like things that I would use when I was like looking at and trying to like evaluate ohm forks is I would look at kind of like the APY and like the relative level of like liquidity and slash like protocol and liquidity, and like talk to the teams and stuff like that, because to some extent, like if there was like a very, very high like rebasing yield, and there was quite a lot in the LP, pretty much you could like basically like, especially if there was like very limited holders too, you could effectively like look at the holder list, come in and buy these things when like they were rebasing super hard, but there was still a lot in the LP. obviously like you need to do proper DD, make sure that like the team is like not gonna like rug you or anything like that. But yeah, basically you can come in, buy that up, and then basically like pull like an RFE on like the LP pretty much. So that was like pretty much like the main kind of focus back during like that time period. And obviously like stuff kind of like evolved over time, like was running different types of strategies on these things. But yeah, mostly going like activist investor route on specifically ohm forks is what got me from like 5K to like 30K. Um, oh, there was another pretty cool one. I put in $20 sniping a snapshot on this one dead ohm fork called Valhalla DAO. And basically like I bought $20 worth of it after they like rugged the LP, told people not to sell, and publicly said that they didn't take the snapshot for when they're relaunching the token. So I bought like $20 worth, and then when they launched the new token, they airdropped me like roughly like 3K worth. So that was a pretty cool win. What's it called? But yeah, I
Easy
pretty much
deck.
trained every own fork there is. Another big win was Sierra DAO. I basically was like pulling the same strategy there. I bought 18K, and within a month, that one was up to like 43K. That was like near a full port on that one at the time. What's it called? I was like looping Nemesis DAO bonds. That was another solid win. But yeah, basically just like doing all that farming and stuff like that, and then eventually got hired at a market neutral fund where I was running like their DeFi book, and that was when I had like roughly 150 to size. What's it called? Obviously, just like before that, like farming, going in and out of like value type of trades, like specifically like looking at like RFE style trades, which is like basically to simplify it, it's buying undervalued assets and going like an activist investor out to try to realize said value out of them. But yeah, basically worked for that fund for about a year. Eventually, like ended up leaving there, starting my own. And then at this point, I already had like around 3 mil or so, but been running that currently for about a year. And then around 4 months ago or so, I took over and relaunched Stream. And in those like roughly 4 months, we've gone from $0 of TVL up to around 128 as of right now. And we've done zero liquidity provision deals, so everyone is on the same playing field there. And we have zero VC backing, anything of the sort. And yeah, there is an airdrop plan to Alpha.
Yeah, I've seen Stream Finance for the first time a few weeks ago, and to me it came completely out of nowhere. And now it's sitting there with a pretty impressive TVL off. Yeah, how much is it right now?
Roughly 128 mil, but per day over like the last week, we've had around like 4 mil or so of inflows. And that's like all purely organic. Like we've spent $0 on marketing, $0 on any like KOLs or anything like that. Basically, the biggest goal is to try to let the product speak for itself and build out like basically like the best yields at one click with DeFi composability built out on top, so people can basically get access to institutional level yields and be able to like use that asset across DeFi as a whole.
How did the idea of Stream initially emerge? Did you just
Yes.
think, okay, delta neutral farming is the next
No,
best
actually,
thing after the Ohm era was over, or how did it come to be?
Actually, I had this idea around like 3 years ago, but unfortunately, I didn't have a dev team that could actually like build it, which was pretty unfortunate because like basically it was like I was at the time thinking like how can stablecoins like be optimized and like what can be done better there, and pretty much had the idea like roughly 3 years ago, but wasn't able to like execute on it. Didn't have a dev team, didn't know a lot of the people that I know now. I'm obviously like less experienced as well too. Like if I'd launched it back then, I think it would have done decent, but I don't think it would have performed as well as it currently is.
Yeah. So what actually did inspire you to launch Stream right now or a few months ago? What is stuff like Ifina coming up with making
No,
this straight accessible?
it's actually not anything really to do with like competitors or anything like that. Like, and or not necessarily competitors. Like, I think a lot of these products have different like PMFs than Stream does. So I don't really like to view like any project in general like as like a competitor necessarily. Like um our our largest like quote unquote competitors like tend to like work pretty closely with like all of them. Like we have partnerships with like YieldFi, Avant, Infinify, a lot of these like upcoming like protocols with like similar types of like PMFs to some extent. I mean, Avant and YieldFi are more similar Infinify is more so like done on a smart contract basis, so I would say it's like a different PMF. But yeah, I actually really like Infinify. I think it's a good idea overall. Yeah, I mean, um, what basically made it come to like fruition now versus then is pretty much went on a trip to Argentina with like a close friend who's like basically like a partner on stream and kind of like his like main dev. And basically like afterwards we went over to San Francisco where I met up with their dev team. They're currently working on another product right now called Cleara that I think is going to be a phenomenal product when that comes out. But yeah, basically talked to them. Basically stream was kind of like ran by them in the past, but it didn't really get traction and they were pretty much like shutting it down. But basically like rather than launch it as a solo product like myself, it made more sense for me to like, I was already working on the development side of it, but launching it as a solo product. But it made more sense for me to take over an already existing product with like a solid like brand name and reputation, and basically get access to like the development side of their like team as well, because they're an excellent like team of devs. They're an excellent team overall. And yeah, I mean, and teaser on their new product that I think is going to do super well. It's basically optimized routing across like the top level VIP accounts on like every major centralized exchange. So like they're partnered with like Binance, OKX, Bybit, all that stuff. And pretty much it's like optimized routing with like optimized perps on all of that as well. It's gonna be super good. And that's like able to be done on chain with quote unquote no KYC. Technically you need to KYB just for like legal purposes. We're going to be selling like cheap KYBs pretty much for anyone to be able to get access to that.
Just for clarification for the listeners who are not yet familiar with Stream, basically where the yield is coming from is funding rate arbitrage. So it is a basis trade. You go long the spot asset, maybe earn some additional yield on top of that spot asset, and then
we're not just purely basis trade. We're not like just like an Athena clone or something like that. We're basically like multi-strat market neutral effectively. So pretty much anything that's like market neutral is like something that we're in. So like this month, for example, on Bybit, we did around $10 billion of volume. Basically, like we're running everything that you can think of. We're probably like running like market neutral. What's it called? Like we're doing like HFT across like Lighter, EdgeX, Row, Hyperliquid, across like centralized exchange, like farming a lot of that stuff there. Basically like I mean we're doing like options arb across like centralized exchange. Obviously like a lot of that stuff's on like first loss / insured. Around 50% of our book right now is like insured pretty much or on first loss. So overall basically like trying to keep risk profile as decent as possible, but Stream's goal isn't to take no risk, it's to optimize risk return. Overall, at most 7% of our like book is in a single position. So we have over 50 active positions. So overall, we're like quite well diversified. And yeah.
Yeah, that's quite impressive to still average. I mean, I'm just looking at the yields right now. So you're currently earning 18% APY on USDC, 13% on ETH, and 8% on BTC.
Yeah, the ETH yield is like slightly overstated at the moment. What's it called? The ETH yield is probably closer to around like 9 to 10. Like post airdrops and stuff like that. But we're basically like scaling into like some like a lot higher yielding stuff at the moment. Like for example, like our like options are like our like ARM technically is like we're basically doing like, I mean we're pretty much operating like peak efficiency there and kind of scaling into that more. But we're doing like around like 60% APR so in US dollars. Yeah, so it's cooking super hard.
Since you're very active, probably one of the top users of all the perp dexes right now that have ongoing points programs, what you're very likely to receive airdrops from them. What are
Yes,
going to happen?
exactly.
Are these going to be distributed to the vault depositors in Stream?
Exactly, yeah. Yeah, all airdrops basically get distributed to vault depositors, and how it works is we pretty much like take like a time-weighted average of your stream asset holding and basically airdrop you based off of that, if that makes sense. rather than just doing it as one chunk. That way, like people can't just like come in and then like snipe the airdrops, if that makes sense.
Is that already calculated into the displayed APY, or is that extra on top?
Yes, yeah. We basically, if you look at the estimated APY, you can kind of see that we put like the liquid yield, and then we also put out the projected points APR pretty much.
Ah, okay. Because I think
Exactly.
a lot of other people with whom I talked about Stream, they were assuming that you were implying this yield on top from your own upcoming airdrop from Stream.
No, these are from like that. Yeah, that's not including Streams airdrop. So, yeah, Streams. Yeah, I mean, I think it's gonna do quite well. I'm personally farming across like a bunch of like personal wallets. I'm running like, just to be like totally transparent, I'm like running like looping strategies, and then I set like a limit order myself on the
Nice. So Stream is already composable with Pendle. So what can you do there? How can you loop this thing?
Yeah, no, so we don't have PT loops up at the moment, but Euler should be going live on mainnet in like, I mean, it's the contracts are already deployed. We should be like a couple days. I think we're already on the front end too, but nothing's like really set up there yet. But yeah, when that goes live, I think that's gonna do super well. Like you'll be able to like loop like PTX USD against like XUSD or something, for example. Like if you wanted to just go like pure stream asset loop there. And there'll also be like USDC there and stuff, obviously. And then we're gonna be posting up bribes on Euler and stuff. And yeah, I think it should do quite well.
But if you want to get pure points exposure for Stream Finance, you just buy the YT on Pendle, right?
Yeah, and our points, like how it's structured, they're not gonna like the multipliers are not going to like go up over time, if that makes sense. Like I know a lot of other projects basically their multipliers or whatever like increase over time the longer that you farm it. I've seen it quite frequently. So it's like basically like a lot of the early buyers of like the YTs effectively get wrecked. We've seen that a lot like recently with like stuff like Level, Resolve, trying to think Falcon. What else is there? Yeah, I mean just quite a lot. Basically, like early YT buyers tend to be not doing so well on a lot of this stuff. But basically, like Stream's point system, to be totally transparent on this, basically like there is a cap weekly on the amount of points that are emitted, regardless of the TVL. So pretty much like earlier you get in, earlier you start farming, better airdrop you're going to receive in that to that extent. Then there's obviously multipliers based off of like the activity that you're doing. So looping actually earns like slightly less of a multiplier, and the YTs earn like a 2x multiplier. And then obviously like holding spot is like a 1x multiplier, if that all makes sense.
Yeah, I think I'll dabble a little bit in the YTs after this call is over because you've got me pretty bulled up. Maybe to go a little deeper into the strategies you're running. So you're not only doing funding rate arbitrage or the basis trade, how it's called in
Yeah, bro.
traditional finance.
I
What
mean,
are
yeah,
the
those
other
were
money market or like delta neutral things you're employing, just to give some examples there?
Yeah, I mean, again, it's like we're pretty much everything. As far as I'm aware, we're the so there's us and one other like individual that has like a TVL deal with Resolve on like RLP, for example. So like we have like a fixed percentage of like the Resolve token supply on RLP, and we're like running like loops there and stuff across like Morpho and everything. And basically, like we have like TVL deals on a lot of the underlying portfolio and work with the teams like very closely. Effectively, to some extent, since we're a protocol as well, like it gives us like a little bit of additional like negotiation power on a lot of these TVL deals, like because we can basically like partner with them, provide them TVL exposure, stuff like that. So there's a lot of protocols that we get like quite favorable terms on. And as far as I'm aware, like majority of our deals, we have better deals than like any fund, for example. And it's not just like the shitty fake deals that are in like Turtle Club and like D Will. I mean, there's occasionally good stuff, but there's been quite a lot of dog shit TVL deals there recently that are basically like fake TVL deals to draw on TVL and protocols that don't have PMF, if that makes sense.
No, I totally get that. I think that gives you quite a bit of an advantage because one thing that I've always been bringing up in discussions about like various yield farming strategies, especially when it comes to looping, is that if you regardless your size, I mean, if you have small size, you're getting hit by gas fees. If you have large size, you're getting hit by slippage. So much is
Yes.
lost through all of these like entry costs and exit costs, then swap fees, slippage fees. And if you're dealing with stable coins where you're targeting somewhere between 10% in bearish conditions to 25 to 30% in bullish conditions, I mean,
Yeah.
a lot of
Or
your
just to
return
be
is going
totally
to be
transparent,
eaten by
like
that. And
yeah, just
like,
to be totally transparent, like our yield will never be like 10%, like ever. That's if it's 10%, that is a complete failure on our end. It will never be that low. Like there, yeah,
yeah,
ever.
Because like you can avoid all of these execution costs that these individual investors are facing, and that probably even quite a few of these smaller funds are facing.
Yeah, and it's like a lot of things too that have like quote unquote like time locks to stuff in terms of like redemptions and stuff. Like we have the ability to like OTC redeem a lot of that stuff as well. What's it called? For some examples of like TVL deals and like stuff we've done, like we're partnered with like YieldFi, Midas. We did some TVL deals with. We were like, at one point we were around a third of their initial TVL. What's it called? Flare. I mean, we've done a bunch with different chains like Plume. What else is there? XRP LEVM. That's like what the fuck is it called? It's that bridge. Squid Router's chain. Axeler. That's Axeler's chain. But yeah, we do like chain TVL deals with projects, but in general, basically, we just try to target whatever's like whatever's optimal. And obviously, like liquid yield is taken more so into consideration than anything else.
Hmm. So are you having...
Oh yeah, Elixir as well. Elixir's another one.
Are you having complete discretion of where you're deploying the funds, or is there any systematic risk management behind that prohibits you from employing certain strategies? Or like how can the user, especially if you're, let's say, a larger depositor who wants to go in there with multiple six figures or maybe lower seven figures, how can they roughly assess the risk reward of Stream compared to PTs on DeFi or just buying a blanket PT on Pendle?
Yeah, so what's it called? Under my PA or any funds that I've like managed ever, I've never been involved in a single exploit or contagion from any exploit ever. I've only profited off of exploits. Like I profited off of like the multi-chain US like X stablecoin DPEG exploits on like Phantom, for example, and a few other ones. And I've white hatted and found bugs in around 7 lending markets now. Around a month ago, I actually white hatted a $23 million white hat on like a pretty blue chip lending market. Yes, it's not going to publicly disclose which one because it's not like public or anything. But yeah, in terms of like DD and risk management, like overall, like it's quite literally as best as it can be. In general, like any new contracts, any protocols that we touch, I always know like the people that run them on. I never touch anything that I don't know the team on or have not like done thorough audits of the contracts on. What's it called? Basically, like we have like devs in house, so I have like anything that we touch, like we look over the contracts on and make sure it's safe before actually going in and entering.
Mm.
Yeah, and obviously, like there's stuff that are not necessarily exploits, but are pose like economic exploit risk to some extent, just based off the way that stuff is structured, and like we look at that stuff as well too. So like for example, UST, like we would never touch something like UST. We wouldn't be touching like resupply or like Falcon Stable, for example, just because like resupply is fundamentally like it's a smart Ponzi. Retail can't necessarily tell it's a Ponzi by looking at it, but it's a Ponzi. Yeah,
What does your research and due diligence process look like? I mean, you have to stay hyper on top of everything, given the size of the Stream TVL by now. And I'm just looking at your transparency disclosures on DBank into all the different protocols you're allocated into. I mean, these are a bunch of strategies that's probably much more diversified than the average pro-tail user or even small institutions. Like, how are you keeping up with all of this stuff?
Yeah, no, yeah, so pretty much everything's we have bots to manage a lot of like the looping positions and what's it called? We pretty much like I'm online 24/7 monitoring stuff. And obviously it's like there's automation as much as possible, like wherever possible, but quite a lot of stuff there's not necessarily like ways to automate on. So it has to be like manually like watched and kind of tracked like that. Outside of the main Stream wallet, so our main wallet is Stream Finance on DBank. We're also running around 8 other different wallets on chain, running more so capital constrained type of strategies. And then we also have around mil on centralized exchange at the moment. Running a lot of those like strategies that I kind of talked about before. But we're basically like building out a transparent. I mean, I can send you a teaser for that if you want, but we're building out a really sick transparency dashboard that pretty much like live tracks everything there. So pretty much like a user can see that, see what's going on, verify it, and all that stuff.
That's pretty cool. I mean, it's quite impressive what you've built there for sure. I mean, compared to what everything else is out there in DeFi right now, I think you have one of the most impressive growth stories there. Where on the risk spectrum between simply lending out either directly on Aave, Morpho, Euler, maybe through some aggregated vault, for example, some of
But
the
under stream we actually do not have any lending positions like in terms of like major like lending markets and stuff like that. In general, like it's my belief that I tend to believe that like lending, I mean, that's just straight lending. That is like stuff like Aave is an exception there. Like we have positions on Aave obviously, but so, like we have zero lending positions on like Morpho. What's it called? Really anywhere in general. Like I tend to operate of the mindset that like, lending is, in terms of risk adjusted returns, actually like more so risky than like looping even. Personal opinion. I know there's a lot of people that will like disagree with me on that, and obviously it depends on the asset, the oracle, and a lot of other conditions. But from my perspective, lending, you're basically getting exposed to like a pool of assets, and each one of those assets has its own risks there. It's like in the event of like an exploit, like lenders are usually the first ones to be hit by that, and loopers, especially like if you're looping on like Morpho and stuff like that, usually tend to be unscathed. If like say like one asset is exploited on the lending side, if you're looping a different asset, like you'd be totally unaffected.
Well,
but obviously like Morpho
just by
has
the
like
fact of asset isolation and pool isolation.
But yeah, like obviously, like all these like major protocols, like Morpho, Silo, like they do their DD, they do everything they can to ensure that that stuff does not happen. Pretty much like I mean, I'm sure a lot of these lending markets do. And obviously, like Morpho is like one of the better ones. But in general, like yeah, I just tend to operate from the mindset that like lending is usually negative RR. And I prefer to let like large institutions like lend rather than be on that side myself. Just because like for large institutions that don't necessarily want to be like actively managing capital, it's one of the best ways like for them to actually like generate that yield. And if you're like an active farmer, then I think it makes more sense to take on the looping side. But like from an institution side, a lot of these institutions have quite significant sums of capital to allocate and not necessarily the manpower to be able to like do stuff like this. And I mean, a lot of them don't even want to touch stuff of like certain sizes. So it's like lending is kind of like the best option that a lot of them have.
No, that makes total sense. Before you're entering any position, are you trying to simulate the impact via the
Of course, yeah,
offered, or
no, yeah, everything like that is factored into like any position that we enter in general. And at the moment, we also have like a roughly like 500K insurance fund in the event of like any drawdowns, exploits, stuff like that. But yeah, again, it's like in terms of like risk management slash like how much of the book is like effectively like can't. I don't want to say can't because I'm gonna like jinx it or something. Considering how much of the book is protected to some extent, basically like doing utmost possible to ensure that like no drawdowns happen as a whole in general.
what are the remaining principal risks, or what parts of the book are not protected versus those that are?
Yeah, it's roughly about 50%. Again, Stream's goal isn't to take on no risk; it's to maximize like risk return on a lot of those positions. So basically, like our yield is going to be like higher to some extent, but obviously there's going to be like less risky stuff. Like I would consider like say Infinify less risky, for example, considering everything is like automated on like a smart contract basis. What's it called? Yeah, I mean like just to be totally transparent, it's like there's obviously like risks that come with like manual execution, a lot of stuff. Like there's multiple layers of risk, and if somebody says there's not risk in anything, then they're quite plain and simply they're lying. But in general, we take risk practices like as seriously as possible, and yeah.
Nice. What ecosystems and what applications are currently exciting you the most? Like, where do you see DeFi evolving right now? Where do you see it going over the next 6 to 12 months?
Yeah, I mean, I think like Stream is probably going to grow a lot. I think Infinify is probably going to do pretty well. Um, I think Avant is probably going to do pretty well. I think YieldFi is also probably going to do pretty well. I think Midas is also going to do well. I think a lot of these 4626 type tokens with like underlying vault type of strategies that have DeFi composability on top of them. I think those type of things are going to tend to be like some of the more appealing stuff to like really look at for these next like few months at least. But I think stuff like as of right now, like I feel like there's a lot less of an on-chain edge in terms of like just the amount of capital that's like looking for yield on chain. Basically, like a lot of like the super outsized like positions are really like diluted down. So you really have to do things that people otherwise like wouldn't be able to execute on or are unable to execute on for whatever reason. people don't necessarily know. Basically, you have to have some type of edge in order to actually generate like outsized yields in this environment. And I mean, not necessarily over the last like 2 weeks per se, but basically like prior to that, there's just so much capital on like in general looking for an edge that it's yeah that basically you have to do like quite a lot of work to find like significant edge.
Mhm. I mean, you've demonstrated over the last couple of years, given your background story, that you have this edge. So why share it through Stream instead of farming it all on your own? Or framed differently, what's the revenue model behind Stream? How do you make money off of all of this?
Yeah. So I have like roughly like 5 mil of personal money in stream. And then I'm like looping that up across like lending markets. So effectively I have like leverage on my own farming to some extent. And like a lot of the loops that I'm in, like the blended average is like around 40% or so on like roughly like that size. So it's like not the full 5 actually. It's like I think I'm looped for like closer to like 2 to 3 mil of that, like fully. Um but yeah, basically like it gives like leverage on my own farming ability to some extent. And yeah, basically it's kind of a way to like bet on myself in that extent as well. And down the line, obviously there's going to be like a fee switch, and we'll be able to like monetize revenue down the line like quite easily. Especially as we're scaling into like more of these like super high yield strategies that have like definitive market edge that otherwise people would not be able to like necessarily execute on. Like I think as we scale more into that type of stuff and kind of like basically the goal is to bring like the institutional level yields and make it easy and available for retail to get access to at one click while maintaining that level of like DeFi composability on top of that for anyone who's interested really.
Mm.
And some funds that we also like are partnered with and like work with like pretty closely are like MEV Capital and Hyperrhythm. They're both like great teams. And yeah, then obviously like my own fund too. But yeah.
How many people are working on Stream right now besides you? And like, how do you manage your operating costs given you don't have a fee switch on right now?
Yeah, so we actually do not have any operating costs at the moment. Pretty much like again, like dev team is basically like free. Obviously, like their main focus isn't on stream. I pretty much like handle everything there. But we're probably gonna onboard like a BD person like pretty shortly. But in terms of like operations, like I pretty much handle everything. We have like effectively zero operating expenses. Yeah, I mean, it's yeah.
That's quite impressive. How do you see DeFi on other ecosystems evolve? Are you active on Solana at all, or
Yeah,
personally
no.
do you
So
go
for
in EVM Maxi, or how are you set up?
Yeah, personally, I'm an EVM maxi. I think EVM is probably going to be like the settlement layer of finance to some extent. What's it called? Like we have like very little exposure to Solana in general. Like in EVM based yields tend to be better and safer than Solana based yields in general. Like personal opinion. Um, so we have like very little exposure to Solana, and like any Solana's the only other like L1 that we or not L1 but non EVM based chain that we necessarily have like exposure to. Everything else is like EVM based. So yeah,
Yeah.
I'm a big. I'm not an ETH maxi. I think ETH is a shitcoin, but I am an ETH maxi in terms of like actually like building and like having stuff grow on the chain as a whole.
What do you think makes the EVM landscape better in terms of risk reward farming than Solana? What is Solana lacking in terms of the protocol landscape, maybe some security features, or what is preventing you from doing more on that side?
Yeah, I mean, I think it's a blended mix of like all of that stuff. Like usually protocols in Solana tend to be like shittier. Like even a lot of these like major like trading terminal stuff like that, like a lot of them are pretty shitty infrastructure wise. Like I know people that have created like better ones that are coming out soon, like in like less than a week, than a lot of these like major ones that people are using at the moment. Um, like in general, like the level of like actual quality of projects themselves on Solana tend to be a lot worse. The yields tend to be a lot worse. The risk return tends to be a lot worse. Smart contracts, or I forget what they're called on Solana, but like the smart contracts there are also like more difficult to operate with than EVM based ones. What's it called? And yeah, in general, uh, again, in general, I'm very like bullish on EVM based chains as kind of being infrastructure for like finance down the line rather than Solana.
I guess a lot of people would agree with you on that side. Maybe to before we have to close off, what advice would you give to people entering into DeFi right now? Maybe let's say with around between a 10 and 100K portfolio, just to get started to play around a bit. Do you think it's still plus EV to
Yeah,
do
I mean
so?
the best thing I can say is just be patient. Don't force any trades. Optimize for risk return. Farm and like generate market neutral yield while you don't have a solid position. When you find something that's very solid, like size properly and make sure to like manage your risk well on that. And when I say like something that's like very good, I mean something that has like little to no downside but uncapped upside. Those are usually the best types of trades in terms of like risk return. So sizing into those are going to be what's going to generate you like outsized returns and be best. And also leverage, assuming it's done like correctly and properly, is your friend and is a very good tool to have. I'm not saying like lever long on ETH or lever long on BTC or lever short on ETH BTC. I'm talking like deterministic trades that are like very outsized in terms of risk return relative to like market returns. So for example, like pre-cooler loans ohm, back when I had like roughly like a 200K or like 150K, 200K portfolio range, I put pretty much like everything into pre-cooler loan ohm and I levered that on Fraxlend because basically there was roughly a 10% spread to the point where you'd be able to like borrow out next month on that. And with Fraxlend, you could take like 3x leverage pretty safely. And obviously, I talked to like the large whales to make sure like no one would like force liquidate the markets there, for example. But yeah, basically like that was like I'm not risk free, like nothing's risk free, but it was a very low risk, a free like 30% ish gain in like 1 month. And you could have done that on size. So like basically like finding stuff that have very little to no downside and basically like uncapped upside are going to be like what's really good. Like I was in pre-IPO circle pretty hard. Basically, like I sourced the deal flow for all of my fund clients and got in on like pre-IPO circle like a month before it actually IPO'd. And we got in around like a 5.5 billion-ish valuation. So I mean, I didn't expect it to do that well. Granted, I thought it was going to be like a 2x, but I thought it was very mispriced considering effectively like Circle had 60 billion of assets. Even if it was valued as a banking stock, like it would be valued at like a roughly similar valuation, but it's not a banking stock. It's a crypto stock that should be valued as a growth stock. And effectively, they had $60 billion USDC like existing with earning potential on like say they put that into T-bills. Obviously, like they pay a lot of their revenue to Coinbase on certain parts of it, but say they're managed properly, say they have minimal upkeep, and say they put that into T-bills on 60 billion, that's like roughly like 3 billion a year, giving it a PE ratio of like 2. Basically, like it should have realistically traded, in my opinion, at around like a 15, like 10 to 15 billion valuation. So I thought it was going to be a pretty low risk, like roughly 2x is kind of what I was expecting, but with very little downside, mind you. And basically, like stuff like that with like very little downside but uncapped upside to some extent are really going to get you the best, most outsized returns in terms of like a risk return perspective, in my opinion.
Do you view any systemically dangerous internal leverage being built up in DeFi? If you just look at the landscape evolving over the past couple of months, we've seen a ton of products launch and protocols launch that kind of tear apart certain yields, as you've seen with Pendle, and there are other that are kind of aggregating it, adding duration to it, adding a lot of active management to
I
it.
don't,
Again, you
yeah,
can
I
take
don't,
these receipt tokens, lever them up. How do you see the systemic risk aspect of
yeah,
DeFi evolve?
I think it's less so a risk in terms of like the leverage aspect, and I think it's more so a risk in terms of like the cross-collateralization aspect. There's quite a lot of like, protocols in general that are very cross-collateralized. So basically, like say Hyperliquid, for example, if something happens to Hyperliquid, like Morpho gets fucked because basically like half of like their largest vault, the MEV vault, is allocated to what's it called RLP. So it's like basically like there's quite a high level, and not only that, but like there's quite a lot of protocols that hold RLP, like
You mean
YieldFi.
HLP?
No, RLP
Oh,
results. Yeah. Um, yeah, as I mean, yeah, HLP just got tokenized as like HLP zero and like this other stuff, but HLP zero is the best one. But my friends launched that one, no fees, straight HLP, very good product. That is a shill. It's better than the HWHLP one, in my opinion. They charge like fees and stuff like that. And the team's based. It's the Ramses Kingdom guys, Shadow team, Sonic and stuff. Like yeah, but what's it called? But yeah, basically like the cross-collateralization aspect of DeFi is like kind of the biggest risk that I see really, because like in the event that something happens to one thing, it's like basically like multiple other things get fucked as a result. Um, so like say something happens to RLP, like a lot of these like things that are operating as like on-chain funds, uh like a few of the Midas vaults have exposure, YieldFi has exposure, we have exposure, um, and obviously what's it called? And obviously like something happening to Hyperliquid as a whole is not going to happen most likely. Like sub 0.5% of that chance of that happening, like if not less. What's it called? Like obviously like nothing is realistically going to happen there. But say in the event that it does, it's like there's quite a lot of cross collateralization across like all of DeFi that would be like impacted from one thing like that. And that's just one example, but there's quite a lot more like examples like that where like a lot of stuff is like very cross collateralized.
Do you see the danger of any Luna UST 2.0 happening in DeFi with the current landscape evolving?
Well, I mean, Luna was a straight Ponzi scheme. I don't really see like I think Falcon Finance is probably the largest like Ponzi scheme type of thing. They just released their transparency reports today, but basically like there's a few issues with it. Pretty much like so they say that they have 160 mil of stables. They actually minted around like 150 mil of unbacked USDF, and I have the transaction hashes for that. So effectively, like either they only have around 15 million of actual stables, or they're lying in their transparency report there. Under the top 100 tokens, roughly 40 million of that 60 million is actually bonk, and they're paying 40% liquid on that. Of the BTC TVL, they're taking regular BTC rather than wrapped BTC, and they're basically taking it like OTC and letting these people generate like quote unquote risk-free yield on BTC. And basically like paying out yield without actually earning yield on that BTC. Same with Merlin BTC. Merlin is basically like unbacked, and they try to do the same thing where they're like one of these BTC LRTs that try to generate like risk-free yield on Bitcoin, and basically like 100 mil of their BTC is in Merlin BTC, which are just like generating like risk-free yield on said Merlin BTC. And obviously when something happens there, I don't know if you remember like the exploit on like the mode lending market with Merlin, but basically like they won't give people the access to redeem it in the event that something does happen there, and they will just take their yield and walk away, generate that risk-free yield, and not be liable for anything. Same thing with the BTC that they're using to mint against it. And then also, if you look at the others page, they have around 25, I think it was 25 million or so. I'm not looking at it at the moment, but around 25 million or so of others. And of the others, a lot of that is basically like protocols, tokens of protocols that they market make on that they're basically artificially pushing up the price of and then borrowing against illiquidly. So if you look at Dolo, for example, basically like since the time that I posted that tweet before, kind of like talking about how it's a Ponzi scheme, basically the price is up 3x since then, and they borrowed out more and more against it progressively. And not only that, but against all of this fake and dog shit collateral, their collateral ratio is only around 107%.
When you're opinionated about the potential downfall or like certain vulnerabilities of these protocols, are you trying to actively bet against them, or how are you?
So in terms of Falcon, I had no active position there just because like I didn't want to have any legal liability in the event that like DWF were to like try anything like legally. Obviously, like I'm fine. I'd cover myself and like nothing would happen there realistically, and like I would win that very easily. But yeah, basically would just with that one didn't take any active position. I don't think I've ever had an active position on anything that I've ever talked about. If you look at my Twitter posts, like as of yet, I've never had an active position on a single post that I've made in terms of like calling out teams or exploits and stuff like that. Like yeah, I've never had a single active position ever. That's not to say that I won't. I did consider it with Falcon, but I didn't actually think like a DPEG would actually happen. I thought that they would continue to like bid it up and let the Ponzi kind of continue, because in the long term, like that's what would be like more profitable for them to do. Like I don't know why they didn't act faster, to be totally honest. Yeah, it's yeah, I was very surprised by that actually. But that being said, like I I don't think Falcon's gonna collapse like soon. I wouldn't farm it, but it should be safe to farm for a while, as long as you're not in like the PTs or any lock positions. But I mean, yeah, it will collapse eventually. What I am kind of curious on is, since they're so connected with USD1 and like World Liberty Fi, if they're going to add it as collateral and then continue the Ponzi on World Liberty Fi and then loop that up with USD1 as collateral. That is what I'm very curious on.
I mean, that must be insane.
That's kind of that's kind of what I see them doing, is like their playbook, and then like literally Trump brings them exit liquidity, and I'm sure like they're getting a cut of all that shit too. I'm sure.
That would be a
Basically, Trump
devious
brings in.
move, man. That would be a devious move.
Yeah, and then like literally like Trump and like a lot of these like large guys are just like literally bringing in exit liquidity for like DWF and like all like the insiders there. But yeah, that would be like they would make a lot if they did that.
Truly fascinating industry we have the privilege to lock into every single day.
Yeah, I really do believe that that's going to be their playbook too. Like, yeah, personally.
Given how deep you are in the trenches, like how is the communication there between all of these big players? I would assume that you know a lot of the other big allocators in DeFi. Like how
Yeah,
gatekept
yeah.
is everything? Because I mean, contrary to just naked directional exposure into, may it be into memes or may it be like OG ETH and BTC whales, DeFi is much more competitive. It is much more zero sum. If you're sharing opportunities, you're getting diluted. So how is that insider community looking like in DeFi?
I mean, it depends on which part. I'd say there's a lot of different like very niche communities. What's it called? And a lot of like very solid people in specific areas. In general, like I have like a Discord basically of like a lot of like people that I consider to be like very good in one niche or another, and basically try to like bring them together to kind of talk through like trade ideas, stuff like that. In general, like I don't. I mean, there's a lot of stuff that is very capital constrained, but there's also a lot of stuff that like you do want to share with other people, and the trades that you can't fully size into. But for obviously, like for example, like Circle, like you could have got sized in super hard to that. I mean, I'm up like a good amount on Kraken right now as well. I bought pretty heavy in pre-IPO Kraken. What's it called? And I mean, I had a very clear edge there. I feel like, but I don't want to discuss that edge. But basically, like there was a very clear edge to be had on Kraken, and you could have sized in like quite a good amount of size. Like I had a friend that sized in like around 60 million or so, I believe, who's now probably up like quite a lot. Yeah, in general, like I think there's still a lot of stuff that you can like share with other people. Like if you're good at finding like these like really outsized opportunities, then like I think a lot of them like you'll always have like more to share than capital you can necessarily fill. Like even on current size, it's like I mean, in terms of yields, it's a little bit different because like yields are like a lot more like you can't necessarily fill said size like I can fill said size sorry on yields. But there's a lot of opportunities in terms of like other stuff still that's like outsized that you can share with other people. Like Maker was another really good example recently. Basically, Maker was kind of like a pseudo RFE on like their underlying stablecoin holdings, and yeah, there was a lot of people that were in that one. Like, in terms of like content creators, you probably know like Taiki. Taiki was very big in
Yeah.
like Maker and stuff, and like yeah, quite a lot of other like smart money guys I know were pretty heavy in Maker.
How would you say you find most of your edge right now? Is it through connections? Is it just through sleuthing on chain? Is it just like giving more input than everybody else? How
Yeah,
would
I
you
mean,
say you've built your edge, and how do you think other people can try to build theirs?
yeah, I mean, I'd say my largest edge is just the amount of time that I spend online and like talking to other people and like surrounded by like very good people in one niche or another, and basically kind of like aggregating said information and just being able to like formulate as best like trades based off the opportunity cost as possible while kind of aggregating a lot of like that information. Obviously, like I have a significant edge in terms of like a lot of stuff myself that I do like my own research on. I pretty much I only take trades after I've done my own research. I never take a trade based off of somebody else's research or somebody else's recommendation. What's it called? Yeah, in general though, like the uh the best way to find edge like right now I'd say is like just like being chronically online and doing the most research possible, talking to like a lot of like the best people possible. Really, I think that's like probably the best answer I can give there because like there's only so much research that you can do yourself. Like obviously I see like most of everything that happens, but there's obviously like stuff that I miss, and like nobody can see fully everything to some extent. So it's like if you know people that are specialized in one area or another that also do very good research and find like very good like outsized opportunities that you talk to regularly, then you can find quite a lot more opportunities there than if you were to just be doing that yourself.
Yeah, I think you're probably one of the most impressive characters out there in DeFi right now. It was amazing having you on. I think this is one of the densest and most insightful episodes we've recorded so far.
Yeah, of course. Thanks for having me,
Yeah.
man. I appreciate
Is
it.
there any last advice you'd like to give to people? Any maybe cycle outlook for crypto? Maybe any other hot takes on other protocols? What should people now know and take away?
I don't want to give any bad advice regarding macro. I'm not a macro trader. I don't pretend to know anything really there unless like I know that I have a definitive edge, which at the moment nothing really like there's nothing I really have a definitive edge on in terms of macro. I feel like in terms of like protocols that are interesting, Extreme's obviously the most interesting. Self shill.
Justifiably so.
I don't. Yeah, I mean, I think re.xyz, that one might be interesting down the line when they launch their points program. Basically, it's like kind of like a tokenized insurance pool that it gives retail the ability to like kind of take like the LP side of like the like an insurance fund, if that makes sense.
What is it called again?
re.xyz. It's better than on.re or whatever, Honre. Like basically like Honre has certain types of insurance that I would not feel comfortable taking exposure to. re.xyz, the overall basket is like pretty well composed, and a lot of the a lot like basically like on.re has disaster insurance, and that can go wrong like pretty easily. But re.xyz is mostly focused on it's a very well composed basket. Obviously, there's risks with like insurance in general, but they use like SUSDs, like the base yield, and then underwrite like said policies, and they do like on-chain insurance as well, which is also like another risk, I believe. But I think they're going to be a very interesting protocol coming up in the next few months because they're doing something like relatively relatively unique in that aspect, and I think they're going to do pretty well. Yeah, I mean, I think that's really like the only like super cool one that I can kind of think of at the moment. Everything else is kind of just like repeating same old type of stuff in different ways.
Do you have any resource recommendations?
I like Midas as well. I think Midas has the ability to like potentially innovate and do a lot of cool stuff. That being said, like I think a lot of their products right now, like I think Stream is a better product than personally. I mean, it's a little bit different of a PMF. Like MMEV more so like I'm sorry, not MMEV. MMEV is like their best product in my opinion, but Midas as a whole kind of functions like tokenizing on-chain funds, and like their Fasanara fund, for example, that basically brings like private credit yield on-chain, which is like a new kind of thing for crypto as a whole. And I think that has kind of like its own PMF there. Obviously, like private credit carries a lot of risk, and it's not something that I would feel comfortable like putting a lot of size into personally. What's it called? But I think Midas has the ability to like innovate and do a lot of really cool stuff and bring a lot of really cool things like on chain that aren't necessarily on chain yet. And I think Dennis, the guy that like runs that, is like very based, and I think that they're gonna do like quite well, and I think that they will innovate, and I think that they will bring on more stuff that are gonna be like very cool to uh, like have on chain in general. And I think re.xyz is gonna be interesting, and I think Stream's gonna be interesting. Yeah, those are probably the biggest three things that I'm really like kind of like looking forward to. And I mean, there's a bunch of other stuff, obviously, and a bunch of stuff that I'm probably missing, but that's just kind of what interests me, just because like it's bringing more use cases for DeFi as a whole.
Do you have any resource recommendations in terms of like almanacs, books, YouTube channels, Twitter accounts to follow, etc., that people should look into to get up to speed?
To be totally honest, like I don't think I've ever read a book on DeFi. I didn't even know those existed.
I think
YouTube,
there were once published by CoinGecko in 2021. These were covering the like basics of DeFi summer, but I'm not sure if I think by now because the industry has matured quite a bit and we've actually seen diversity of yield strategies and protocol. I
Yeah,
think
I don't think
somebody
a book
should
is
try to publish like a DeFi almanac. I think
yeah.
it wouldn't
I
make
don't I
sense
don't
to
think
do
a
it as
book
a
is
book
ever going to
just
be.
because it's too dynamic, but maybe as like an updating website or something.
Yeah, I think to be totally blunt, I don't think a book is ever going to be able to do that. The best thing that's like kind of similar to that, again, I think is probably going to be like DeFi Dojo. In terms of getting edge from like social media, I don't think any edge actually exists on social media. Usually, it's people shilling their bags or like really like bullshit in general. Like I don't really get any information from Twitter in general or YouTube.
I think it's right for directional trades. I mean, at least to discuss some theses with people. Of course, you have an incentive to exaggerate anything, but I think for directional things, it's interesting. Also for
Yeah,
some of the macro takes, but for DeFi, I agree. There's very little useful content out there.
So yeah, the thing is with directional trades though is if everyone has an edge, then no one has an edge. And kind of what I mean by that is like a lot of these people that'll talk about stuff on like social media and like stuff like that, they will already have large positions and be quote unquote like chilling their bags to some extent. And I think a lot of like, especially like macro focused funds, really have no idea what they're talking about. There is some small ones with edge, but a lot of these like I mean we saw it with what was it called, dialectic or something the other day, or no, what was it, asymmetric? Yeah, it was
Asymmetric,
called
yeah.
asymmetric. Yeah. Like dude, they're down 80% doing bullshit. Like, and the guy's like going on podcasts trying to act like a genius, and I feel like that's a very similar mo with a lot of like directional fund managers. That being said, I know quite a lot that do have an edge that are very good. Um, but in general, I think there's quite a lot like that, and I think that the ones that are on social media talking the most tend to be like that. What's it called? But again, there's quite a lot that aren't like that, and there's quite a lot that have definitive edge and perform very well. But a lot of those ones are also like prop capital too, to some extent, and aren't necessarily like taking like public funds. The best performing funds are usually prop capital. I mean, there's a lot that aren't, and there's a lot that have like capital in them. But yeah, I mean, it's like in general, like people are obviously going to perform better with their own money on the line than like other people's money, if that makes sense. Looking at a lot of like these large funds.
I agree with that. I think that most of the people do not have the edge that they proclaim they do. And we've seen it over and over again that many of the idols, many of the saints of DeFi Twitter and crypto Twitter as a whole have been kind of exposed and
Yeah,
lost
dude.
their
Like I,
life
I
jacket
actually
in the
despise,
last
I
year.
actually despise like most people on like Twitter. Like to be blunt, like I think most of them are like grifters and pieces of shit for the most part. Like especially a lot of the ones with large followings. Like there's usually a direct correlation to like the number of followers somebody has and the level of grift that they are usually on. If you want some good content on Twitter, like talking, he basically like articulates a lot of these points quite well, and he's a very good friend. Definitely check out Santisa. He's like a pretty good market neutral farmer I know. A very nice guy. Recently got hired to Spark. What's it called? Yeah, he posts like very good takes that I share a lot of very similar takes to in terms of a lot of this stuff. Like most funds, like benchmarked versus like their benchmark asset BTC. They try to benchmark in USD, but they take directional exposure. So like their benchmark should be in BTC. They tend to underperform BTC by significant margins, and that's for like most directional funds. Again, that said, there is ones that do have an edge. I'm not knocking them. I am knocking the ones that don't have edge and just do bullshit.
Yeah, I think I'll definitely link him in the podcast description. Where can people find you? Where can people learn more about Stream? What link?
Yes, I go by 0x Law LOL on Twitter. I think the best place for people to learn about Stream is probably going to be the Stream Discord. I'm usually very active on there, and I try to answer like every question anyone has. And I think we're going to start doing like bi-weekly or monthly calls just to like kind of keep the community up to date with like everything that's kind of going on there. What's it called? Yeah, the Stream Discord is going to be the best place there. And then Santisa is I think 0x Santisa. Yeah, huge shout out to him. He's like very underfollowed on Twitter, in my opinion. Posts very base takes, very good like market neutral farmer. He tends to more so focus on not taking risk. So like rather than optimizing for risk return. So I think he's a very good fit for Spark in that regard. What's it called? So he puts like a little bit of an overemphasis on risk, I feel, but at the same time, like he's a very good farmer. Santisa, hold up, let me send you his Twitter. His is at TIZA for the people. But yeah, huge shout out to him. Very underfollowed guy on Twitter. Posts very base takes, and definitely think more people should be following him. Like probably, he's in my opinion right now probably one of the best accounts you can follow on Twitter in terms of like the DeFi space.
I'll make sure
I'm
to
not, yeah, I'm
include
like a
all of
little
these.
like I definitely I'll definitely also like self promote and share my Twitter and stuff too, but I'm not as active on there as like he is, and there's quite a lot of other like great guys on Twitter. Octoshi is also very good.
Oh yeah, I've recently seen him for the first time. He's a good
Oh, you
follow.
met him in person?
Oh no, just on Twitter. He's
Oh,
never
okay.
been on my timeline before.
Yeah, no, he's a very like a good friend. And yeah, he's a great guy. Known him for quite a while, like since I even like had like 100K in crypto. What's it called? And yeah, he's definitely somebody I think you should be following on Twitter as well. Uh, Dio Casares, he's also someone you should be following. Very base guy. Always has like very good takes. Posts great articles regarding like he posted like a Kraken article, Circle article. Like he's the one that kind of brought those on my radar to some extent. And basically like on Kraken, like I'm in that like pretty heavy with him.
Mm.
And yeah, he also basically like has like an OTC desk type of thing that he kind of sources a lot of these deals for on people. Obviously, like there's a pretty high minimum ticket size, so it's not necessarily the best for retail. But definitely recommend following him and checking him out on Twitter as well. He's also like my partner on stream. Like yeah. What else is there? Like in terms of Twitter accounts, those are probably like three of the top glaring like things. I think Yields and More is definitely going to be good to follow too. They post like they're a great community, probably the best farming community in my opinion. I think DeFi Dojo is probably number two. Sorry,
All
but
good.
I think DeFi Dojo is pretty
No
awesome
hard
as well.
feeling.
Like in terms of like getting beginners in and getting started in yield farming, I think DeFi Dojo is definitely going to be like the best for that. But Yields and More is usually a lot more selective in terms of like who they let in. So like if you're new to yield farming or new to DeFi in general, like you're probably not going to be let in. But their Twitter account, they post exploits relatively fast. A lot of the members find exploits. I think there's definitely some good alpha there. Yeah, I mean, of everything that I can kind of think of, those are probably like some of the most alpha packed accounts that you can really follow. And obviously, I think DeFi Dojo is actually very good for retail as well, like in terms of like following on Twitter. But yeah, I think that's like really everything that comes to mind. Like, there's not very many like
Yeah, I think these are more than enough for everybody to get started. There are definitely a couple of
yeah,
gems in there that are not.
like roughly like what five recommendations. I think that's a pretty good amount.
And having
Also, Yields and More member also that posts like pretty good alpha and kind of uses his Twitter like a trading journal. He's a lot less followed and has like less than 1,000 followers, but I actually quite like his content. I think that he's very transparent and posts like very good stuff. Is Rami Poker. He's like an ex like pro poker player and he posts like very good stuff in general.
Oh yeah, I think I've seen him a few days ago. But
Yeah, again, he's got less than 1,000 followers, but he's a good farmer, good guy, and posts like a lot of like very good content on Twitter. Overall, I think those are probably like the best places. Like I can't really think of anything else like on Twitter. I think Olympio is pretty good for airdrops too.
yeah. No man, thanks for
I'm
all of
probably
these.
just yapping at the moment, but yeah, there's quite a lot that I'm missing. There's quite a lot of very good accounts.
No worries. I'll make sure to link all of them in the show notes, and if there's any other that are coming up later, I'll just make sure to include them. But yeah, man, it was amazing having you on. I think there was a lot of alpha spilled, a lot of lessons to take away. Very
Yeah,
dense.
I mean, in general, like I try to be transparent on pretty much everything that I do. Like I usually never try to like hold back alpha or anything like that. And if I don't feel like there's an edge, then I obviously like, won't like say anything. But yeah, I mean, um, and yeah, I'm pretty much always online. So if anyone like has any questions regarding stream, yeah, I'm pretty much always active on Discord. And yeah, if anyone ever wants to like talk, has questions on stream, like feel free to like message there. And
Very nice. I think one of the most dense episodes we've recorded so far. Was amazing having you on, and maybe we'll have a round two, either with you or in a round table format with some other guests.
yeah,
And
of course. Thanks for having me on, man.
pretty
And yeah,
excited about it.
we'd love to come back if you ever have like a round table with any other guests.
Absolutely, we could try to get Stephen O'Mara on from the DeFi Dojo or some of the other DeFi people.
Yeah, it would be sick.
Pretty cool. Was great having you on, and great talking, and see you around.
Yeah, of course. Take care, man. Later. Thanks for having me on.